Hey guys, Small Cap Science here. Today, for another episode of SCS Labs, we're going to be talking through Vela Exchange. It's a decentralized Perps protocol on Arbitrum. There are a lot more derivative markets popping up. These are normally pretty profitable protocols, and Vela is one of the ones that I'm more bullish on. We'll dive into how this is different from some of the behemoths out there, like the Gains Network and the GMXs of the world. A little bit about the project, we'll run through the white paper, and then I'll talk through some of the angles and narratives that I'm targeting. So let's get started. Just to kind of kick things off, something I want to touch on is Vela kind of fits a small niche. So everybody talks about how they want a completely on-chain decentralized perps option for trading, but Vela kind of fits somewhere on the spectrum of decentralized because their team is actually a centralized entity. What I mean by that is they're actually all doxed. And I do think there's a massive space for this in DeFi that gets overlooked. When you have people who are coming from like a TradeFi background or with VCs with extremely large capital, they want to know who's behind these projects, and having a face and name to hold accountable is pretty important to a lot of people when you're talking about 8 and 9 figures. So I actually look at this as a good thing. So I know some people out there like kind of teeter-totter on thinking that it's a negative that their team is a little bit more centralized, but I really do think this will help pull in big capital in the long run. Just looking at the team, Dan and Travis are both from Boston Consulting Group. It looks like they have a decent amount of experience. You have a former Relay Chain guy who's built an awesome bridge aggregator, Rome Blockchain Labs, former balancer on the marketing side. Yeah, exactly. And then also some engineering just with blockchain experience. But overall, a pretty hefty team, and really like what I see from a team perspective. When you look at the advisors, once again, like these guys are all Chads. You have Polygon, Moonwell, Bitcoin.com, Time Research Portal. Like sometimes when I see these advisors though, like I think one of my hesitations can be how much time do they actually spend on these protocols? Like when you have somebody who's a founder of like CEO of Bitcoin.com exchange, they don't have a ton of time to spend with them. So I do sometimes take that with a grain of salt. I think it's awesome that they can lean on some of these people for relationships and like opening doors for them in the industry. But overall, like I don't think they're concentrating on Vela on a day in and day out basis. But overall, like super excited on the team, what I've seen from them so far. We can dive a little bit into the white paper. I'm going to be honest, I love this white paper. I think it's something that so many teams miss on. You have one chance to really impress investors who are coming in and looking at your protocol pre-launch. And it's normally not in a face-to-face environment. It's them looking through a white paper and learning how your protocol works. Vela did such a great job of putting together a nice looking professional white paper. They hit all of the main points. Here's really our differentiators. Here's why the product matters. And like so many teams really need to look at this and start over when it comes to some of their white papers, because it's the reason that a lot of their protocols don't get the traction that they should. Looking through the table of contents, super clean. You can figure out exactly where everything is. It gets right into what the platform is. These are all the things that people care about when they're looking at a perps exchange. Like, is it decentralized? Can I use leverage? Like, what can I actually do to make money? And that'll be your VLP and Vela positions. Like, does it have stop losses? Can we do synthetic assets? Like, they hit all the main topics, and I think all of this is a great overview level. When you look at like the assets that will be supported, it's not only crypto, also doing some Forex. You can trade the actual Arbitrum TVL from a USDC standpoint with leverage, which I think is extremely cool. So you can make bets on really the crypto ecosystem, either growing or shrinking, which is pretty cool, and I feel like a differentiator. But the reason that they're able to do these Forex trades is because Vela is already built synthetics. So their platform, like when you're actually making these trades, is all backed by USDC, but they're able to trade synthetics. So I would expect as liquidity gets deeper that these pairs grow extremely quickly, and hopefully they have some things that really stand out compared to the competition. So like, almost out of the gate that they're gonna get some volumes because GMX doesn't really cover this Forex piece. You can trade this stuff on Gains Network, but it's a little bit of a different platform. Right out of the gate, they're going to get volumes because they have some different trading pairs that nobody else has. So with that being said, I think there's tons of cool stuff that they're doing from position management and tolling. These guys are kind of next level when it comes to this stuff. from quick conversations I've had with them, and the goal is to make this look and feel as much as they possibly can like an actual centralized exchange. They do a great job of it. And part of that, and the biggest complaint that I see of people using decentralized perps exchanges, is the tolling. You don't have the trailing stop losses, you don't have take profits, and if they do, they don't work extremely well and aren't very intuitive. So like limit orders, adding and removing collateral is extremely cool. They'll text you like when your position's at a certain like liquidation level, set alerts to like prevent you from getting liquidated. So they really have traders at mind. It shows when you take a look at the UI, which we'll go through here in a little bit. They also have one of the key pieces to what made GMX's growth so successful was the referral program. So if you look at GMX's referral program, they actually have it set up so that there's 3 tiers. It's 5, 10, or 15% of fees. But most people don't ever get to the 15% of fees. Very high volumes are needed. So you need at least 30 active users using your code and a combined weekly volume of 25 mil. Like that's a very large amount to get to that tier 3. It's a little bit of a different model for Vela, but when you look at their referral program, there's kickbacks of 20% on all fees. So right out of the gate, hey, for some of those are like mid-tier referrers, that's a very big jump going from 10 to 20%. I really expect their liquidity to ramp up quickly because of it. And I like that they did this model and not just only rewarding like the biggest influencers. Because even like myself, I had a referral for GMX for a while. I was nowhere near scratching this tier 3 level. So we'll see how that goes, but I'm expecting a lot of people to be promoting it because of it. Token rewards, I think this is extremely important. So they have a 2-token system. It's extremely similar to GMX and GLP. So GMX in that scenario is the governance token. It also earns a portion of the platform fees. VLP is the liquidity token. So as VLP is minted, liquidity gets deeper, and that's what all the actual trades go through. So with GLP, the underlying assets are Bitcoin, ETH, USDT, and I believe 1 or 2 others. With VLP, because they're using synthetics, all of their liquidity for Vela is backed by USDC. So you deposit USDC to mint VLP, and then you stake your VLP for more platform rewards. So if you're staking either Vela or VLP, you're going to be paid out in perps fees in the form of USDC and eVela. eVela is just their vesting token. It takes 12 months to vest, which is I really, really like for this model. This is one of the differentiators in my opinion. When you have an eVela that vests over 12 months, you're kicking the can down the road with some of that dilution, but 12 months is a long time for an exchange like this to grow. And we'll talk a little bit about their buyback program, which really makes it so that eVela isn't really net new emissions. So it allows you to have a lower amount of fees that generates a bigger profit for the actual holder. So I really do like their flywheel and reward system. With that said, like when you look at the perps fees and how they're split, 50% of it goes to the VLP vault. So if you deposit VLP, not only are you earning based off of some of the liquidations and fees on the platform, but you're also paid out 50% to the VLP vault that's going to be paid out in USDC. So if you can have a stable position that's paying you out in Vela and USDC, liquidity is going to get super deep. I really think that the degens and treasuries that are like, hey, we have all of this USDC, like we're in a bear market, how can we make this productive? This is such a good spot for them. And like we can talk through some of the APRs and stuff in a few minutes. 20% on eVela. If you have eVela, which is just vesting Vela, 10% goes to Vela, eVela, 10% goes to staking VLP. That's how they're actually paying out the eVela rewards. So what this is they actually buy back Vela on the market with 20% of all perps fees. And then they're going to pay that out 10% to staking of Vela and eVela, and then 10% to staking VLP. So if you're in the VLP vault, you earn 50% paid in USDC, and you earn 10% paid in eVela. If you're in Vela, you earn, I believe it's 5%. Yeah, it's 5% in USDC rewards, and then you're also going to earn 10% in Vela and eVela from those buybacks. And the other 25% will go to the treasury. I'm excited to see what they do with that. I think that seems a little bit high, but they haven't done a raise yet. I know they're looking. If anybody's interested, I'd reach out to the team. If you do have a big VC to lead around. But with that being said, I think that they can do some pretty cool stuff here and do some incentives and really grow the platform by having some of these extra treasury fees. I could see a world where they do like a rush or incentive program and pay out to their highest volumes, or even just do like larger buybacks for a share of time. So like I can't see them using 25% total to support the team in the long run, but I think they're definitely going to find ways to bootstrap the protocol. Vela is like native token. I already went through a lot of this. Escrowed Vela, VLP. Nothing too crazy here that I didn't already cover. There's open and closing fees, VLP minting fees, funding fees. Some goes to the treasury, some goes to rewards, realized profits and realized losses. So as traders win and lose trades, that profit and loss that comes in and out of the VLP pool. So there is a little bit more, I would say, risk than standard stables. If you're talking about, hey, I want to deposit VLP into a pool and I want to earn whatever APR that the platform's offering at the time. If for whatever reason, all of the traders are insanely profitable, that pool can actually end up being a lower value based off of like what we've seen. Really across all of crypto, these perps exchanges, everybody's way too degen. They use way too high leverage. This has 30 or 100x leverage. People are going to use it, so they're going to get liquidated. And there's been very few weeks or even days where GLP pools for GMX were actually in the red. So over time, I think this is a very profitable pool, and I have already deposited a decent amount of money in here. So what does this look like when it comes to staking? I already kind of covered this. The only thing that I would add that I might have missed is the 72-hour cooldown. If you either mint VLP and stake it, or you stake Vela or eVela, there's a 72-hour cooldown before you can actually pull that off the platform. I think that's mainly to prevent people from like depositing a ton of liquidity, taking a position, pulling their liquidity out, and trying to find ways to use flash loans and exploit the protocol. But with that, I think it's mainly a safety thing. Maybe they'll lower that in the future. I'm not entirely sure, but I don't think it's a bad thing. So something to keep an eye on though. When you look at different cycles and how the rewards go, right now, because they just opened their public beta, we're going through this front-loaded rewards phase where all of the rewards for VLP are paid out in eVela, or Vela and eVela. But like what that looks like is this is a bootstrapping phase where it's going to take a little bit of time for the fees to be earned, and them to do buybacks that they're going to pay out to the actual VLP and Vela and eVela tokens that are being staked. So as you head into like weeks 1, 2, 3, 4, like you get down there, you'll be able to get a better chance and get a better feel for what the rewards will actually look like based off of those actual fees and buybacks. So right now is like a good time to start earning a position up front. And that's really the strategy I've taken, staking both VLP and Vela. I do like it from a front-loaded rewards perspective. And based off some of the volumes I've seen so far, I think it's going to be a pretty nice APRs even when we get down here into the fees and buybacks. So to dive into the buyback model, 20% of all generated perps fees are used to buy back Vela from the open market, turn it into eVela, and pay it out to stakers. I absolutely love that because like what it's doing is it's taking 20% of all perps fees. It's going to buy it on the open market. So you're going to have a price floor because of those fees. So Vela's price is going to be supported. When Vela's price is supported or Vela's price goes up, VLP APRs go up. So do the Vela and eVela staking rewards go up. So it creates a positive flywheel. On top of that, like what you're doing is when you're buying back this Vela from the open market and turning it into eVela, eVela has a 12-month vest. So if you vest it over 12 months, you're kicking that dilution down the road. So over time, the actual liquid Vela on the market should be decreasing. It depends if fees are going to outpace emissions, but it gives them really a year of like a bootstrapping growth phase by all of these buybacks being pushed down the road into eVela. So just for an example, if they do buybacks where there's 1 mil in generated perp fees, 200K goes to buybacks. They'll take that 200K, buy Vela, turn it into the eVela, and then to pay that out to stakers. So it builds a lot of long-term users. I really like the model, and I think it keeps the circulating supply super low, especially in the first year when they need to bootstrap. So especially if there's big fees early on and there isn't a massive circulating supply of Vela, if there's some big buybacks up front, Vela price is going to send. That means VLP APRs are going to send, and all of a sudden, like this thing's going to have extremely deep liquidity, and those rewards are all going to be paid back to stakers. So it has a chance to fly depending on the adoption. The issue is there isn't a whole lot of transparency. Like it's very hard to predict how many users will be using this, what kind of size they will be using, whether or not they're going to make money. So I will say the APRs in these models, like there is risk of the traders making a lot of money, but also there's risk in you don't really have transparency when it comes to future APRs. And then also, if you stake Vela, you can get trading fee reductions. So like similar to how we talked it through GMX, here they give discounts for traders based off of like referrals and whose link that they're using. But I can't say I really love that. Like, hey, we're going to give you bigger discounts based off of whose link you use. So I really do like the Vela model. Like they do it based off of how much Vela you have staked on how big the discount you get on trading fees. So I think the circulating supply right now is 5 million and FDV or max is actually 50 million. So this is 1% of supply, or right now it's 10% of circulating supply, which is sick. Nobody has that. But as it grows, they can work towards it. But still 50% off of fees for somebody massive would be huge, but it gives people a reason to stake and gives another utility for both Vela and eVela. And another reason for people not to vest their eVela as well, which I really like. The other thing that I think is extremely important is when you look at these future awards. So this is something I didn't touch on even in my thread. And future awards, like 40% of all spot fees are going to be going to Vela and eVela stakers and 30% of OTC fees. So something I didn't touch on is Vela used to be called DEX pools, and they have an OTC market. That's another massive, massive fee and like revenue driver. And I think a lot of people are very much so overlooking this. So as they like leave beta, I assume is probably when they'll start concentrating on the spot and OTC markets. But I mean, this alone could really help send the price of Vela. So we'll see, and it's a catalyst to keep an eye on. When you look at tokenomics, this is like distribution of Vela, 25% to a growth fund, extremely bullish on them building out the ecosystem with 25% of the growth fund. Community incentives are 35%. Marketing 10%, which is huge marketing budget. Core team taking 10%. Surprised, they feel like this is actually pretty low. DXP is their DEX pools allocation. People who DEX pools tokens could convert to Vela. Team growth 5%. Investors 5%. I don't know what their actual seed round was at. I know that I mentioned earlier that they were trying to close one. And then some of those advisors, those 6 advisors we saw earlier, I'm sure they got like 0.5% each is what I would assume. Nice little outline of what it looks like from a vesting schedule. Core team, 6-month cliff. So we're not quite there yet. They don't have any of their tokens. The private sell for DEX pools, 10% unlocked at launch. No vesting on some of their newer tokens. So this is all emitted. And they have this for future investment rounds, Q4, Q1. So Q4 2022. And I believe they're still looking to close this round. And then advisors, 6-month cliff with linear vesting for 18 months. So they're actually a little bit longer than the actual core, or a little bit shorter than the core team. I would have thought it would be opposite actually, but interesting. Projected Vela emissions schedule. Something that caught a lot of FUD extremely early. So this was originally 100,000 tokens was their max supply, and people lost their mind. They're like, this is another DYDX. Emissions are way too heavy. Like, this is never going to work. The team, shout out to them, was super quick to say, all right, well, we'll cut the emissions in half. They actually cut out like half of supply, and nobody really talked about it. They put out a nice little communication on it through Medium, but pretty cool stuff. And I think that's one of the reasons that the token started to do so well as more people have caught on. But with that, so this is based off of 50 million. They wouldn't even reach that by 2027. So like I would ignore the FDV for a large part of this. Like yes, we'll eventually get there, but 4 years in crypto is an insane amount of time. That's like 3 decades. When you actually look at like year one, it goes from about 7 million to about 17. What you have to consider though is a lot of that is going to be done through eVela. Also, there's pieces of it that probably aren't going to actually end up hitting circulation. When you look on some of the some of it'll be the core team, some of it'll be advisors. Like, I mean, technically will it be in circulation? Yes, but like I don't see it really being sold off. So like at that six month mark where the team and advisors really start to be paid out, it's a bigger deal. But I don't think you're going to get the selling pressure that everybody thinks you are, and I don't think dilution's nearly as bad as everyone makes it out to be. The governance model. So governance is coming. That this will give a lot of power to the actual Vela token. I think as we've seen, like there's been a lot of hot off the press GMX governance proposals lately around like building a treasury, and also like they could technically vote to get all of the rewards over VLP if like the Vela holders wanted to. I don't think that'll ever happen because it doesn't make sense for the health of the protocol, but like it does mean like in the long run that the holders of Vela will have a lot more power. But when you look at the roadmap, once again, that OTC market that nobody's really looking at, I think is extremely bullish. interoperability solution, spot market launch. So it's going to be like a normal DEX that you can trade through. Expanded asset support. I don't think they've touched on or like really expanded on what assets these might be, but like I'm extremely excited for that piece to see like what actually they launch. I really wish they would do like a deep market on like gold, silver, and some of those, but we'll see. Trading management enhancements. I really think that this DEX is going to have some of the best tolling just based off of what they've launched already. And then also API enhancement for bot integrators. And I'm sure they're going to try and find some revenue models off of those bot integrations. 2024 multi-chain support. That's a huge uptick in fees. Trading analysis toolkit, tax and finance dashboards. Taxes are miserable in crypto, so I absolutely love that. So that is about it for the white paper. And we can dive into the actual rest of the model. To continue the conversation on GLP, Dune dashboards are absolutely amazing. They have them for almost every project. You can search and like find your favorite DEXs, some of your favorite protocols. So I love looking through this stuff. But if you're looking at just like the combined value in some of these GLP vaults, and this is only the top, four protocols, have 35 million in them. I think this is a market that even outside of these top 4 or 5 protocols, that a lot of that market share can be taken over by VLP. So something to keep an eye on of how this trends versus VLP over time. But like some pretty cool stuff on like vault in and out flows. Like I think some of these will have better stats. Like Vela will probably have similar stats across their exchange at some point. But for now, a lot of that's still being built. But right now, I think Jones is the definite winner as far as like percentage of supply. And that's because of their gamma neutral vaults. But pretty cool stuff. When you actually take a look at some of these delta neutral and gamma neutral GLP vaults, like when you look at the actual returns, Jones is really the best and biggest one right now. It's offering about 44%. When you look at something like this is actually the Plutus vault, their actual APR is about 25.6% APR. So like, I mean, those are decent APRs if you're thinking that, hey, they actually are delta neutral and it's similar to having stable coins. But like what that actually looks like when you actually dive into Vela is their VLP is actually backed by stable coins and current APRs are 56%. So although there is some risk in case like all the traders that like somehow are magically profitable, I don't see that being the case. But if it is, like you can lose the actual value of this underlying token and VLP can technically decrease. But with that 56% APR and you're getting the underlying growth, like how can GLP vaults compete with this? It's extremely hard. So like I think I was playing with this with beta. I have a little bit amount of VLP in here. But like what exactly that looks like, 56% on top of like the actual growth of VLP. This could print over time, and I see liquidity getting extremely, extremely deep. So really when you look at VLP, they did do a deep incentives program called Hyper VLP for people who were minting early. They already minted out 10 million, so they filled their entire VLP round. So they have over $10 million in liquidity. I believe it's actually closer to 14 or 15 million right now. But some of these people who were early got into beta, like these APRs are pretty insane. But it's really worth it for them to bootstrap liquidity and make sure that they can have trades, get some of that liquidity easy or early so that they can really crush it from a fees perspective. When you look at Vela, you have Vela price, you have circulating supply, the total supply, which is everything that's minted right now. Max supply, as we talked earlier, for the FDV that we're probably never going to reach. It sits about a 38 million market cap. You see your returns on Vela and eVela being about 3.5% to 4%. This is without the amount that will eventually be paid in USDC, and fees are still ramping up here. So I think this is like something to keep an eye on of like what some of the returns will be for Vela and eVela. Just on like some of those buyback models. I think one of the most important things is we've touched on Vela and eVela a ton, but like let's look at the actual platform. This is like one of the things that will actually keep traders coming back. And let's just talk about the fact that they have trading view charts. This is absolutely a dream come true for most traders. Like just being able to like use trading view. I think it's actually limited right now, probably because they were having some issues just due to the high volume and like they were struggling with the interface. I think they bogged some of this down earlier today. But like this was so intuitive and like this UI is so clean. Like I really, really do like what they've built here. I think it's pretty sweet when you're talking about stop markets, stop limits. Like this is all just so clean. The charts, like, I mean, being able to trade ETH, Doge, Euro, pounds, yen, Like, I mean, I just really love the UI. I think they did a great job putting this together. It looks professional. Like, everything here is just super impressive by my standards. So this is what keeps traders coming back and like allows those fees to be generated. Let's talk about these NFTs really quickly. I think these could definitely be something. I bought a few of them. I own 3 of really each. But these are from the AMAs. They've been giving them out to people who show up to the AMAs. They're trading for like 0.02. But if it's saying NFT Forge, you're probably going to be able to craft these into some benefits. I would think buying up these NFTs. Like I said, I only bought 3 of them. This is all I own across all of my wallets. But with that, like, hey, probably going to say there's going to be 2 more NFTs that come. And if you're going to get platform benefits from them, it's probably worth maybe showing up to the AMAs, trying the beta core, launch core, whatever these are, doing some DD and scooping some of these NFTs because it's going to have platform benefits in the long run. I think that's probably a pretty good speculation play based off of where the value lies. All right, let's dive into the actual alpha of why is this bullish on Arbitrum? Like, what are some of the narratives and the actual numbers? Like, hey, it's DeFi. If you don't crunch numbers, then you're definitely missing out. Shout out to Patrick from Dynamo DeFi. I think this has been circulating on CT and crypto Twitter quite a lot. There has been just a massive amount of inflows to Arbitrum lately. But hey, VLP is backed entirely by stables. I think a lot of people have missed that. Hey, they've already raised like 15 million of liquidity. So a lot of this is people coming in and starting to use Vela. So like if you look over time how it's steadily trending up, this is massive for Arbitrum as an entire ecosystem, but also with Vela, more and more people starting to come in and use the platform, I think is extremely important. But let's compare it to some other dexes. I think here's where it actually gets a little bit more fun and you can speculate a little bit. So here you can look, I'm using DeFi Llama to look through different fees based off of other derivatives exchanges. So these would be all the comparable exchanges that are out there in the market. I think based off of where they're already at from a TVL standpoint, they already have about 15 million, 3 million open interest. I think it makes sense if we're comparing them to a few of the bigger exchanges on here. I won't do GMX because really GMX is already kind of the king. I don't see them catching GMX right out of the gate. But let's talk about how it would compare to Gains Network. And we can also talk about a little bit how it would compare to Level Finance. I think this is a pretty even trade as to where it stands currently today. So I ran some of the numbers on this in a tweet I just put out, but even if you look at the fees over 7 days here for Level Finance, $381,000 in fees. About 20% of that is about $80,000 almost in fees that would go to buyback and burn if you had Vela with comparable fees. You take 80,000 because this is a week times 4. You have 320,000 a month, and all of a sudden you have a pretty hefty buyback and burn over the course of a year, just based off of Level Finance's numbers. So if you're doing just the same amount of fees that Level Finance is earning right here, that gives you $3.8 million in buyback for Vela over the course of an entire year. That's wild to me. I mean, it is about, I think about 30 million market cap right about now. That's 10% of circulating supply being bought back over time just by the exchange. So makes me pretty bullish, but something to keep an eye on. If you do it based off of Gains Network. So Gains is doing about 850K in fees. You do 850K times 0.2. It's 170K a week times 4. 680,000 a month times 12 is $8,100,000 in buyback, and Vela turned into eVela to vest and paid out to stakers. So 8.1 million in buybacks is insane. So I think just getting to the level of either maybe Gains Network or getting into the same as Level Finance, like it's very bullish if they get to that point, but also like you're looking at, this is still a decently bear market. If we're talking about what these fees can actually get to when you're talking when all of retail comes, we're hitting a full bull market, these can skyrocket like 10, 20, 30x. And along with Vela, like the buyback and burns could be absolutely nuts for this. And like, that's where they could actually be outpacing inflation. So crunching some of the numbers on what buybacks will be based off of fees. I did a quick look and through like exactly my tweet, like just based off of Gains Network, it was about 40 million in fees annualized. Level Finance, it was 18 million annualized. When you look at that for buyback and burn, Vela at Levels fees, 3.6 million. Vela at GNS fees, 8.2 million. On top of that, you have 900K in paid to Vela stakers in year one. And you have 2 million paid to Vela stakers in year one for GNS. When you look at VLP, this is where it blows my mind. If you're at those levels, like just Level Finance, I don't think Level Finance is that much bigger and like better than Vela. $9 million to be paid to VLP. That's wild to me because VLP is only at 15 million as it stands today. So that's a pretty much almost, I mean, that'll probably be a 50% return just off of like the actual USDC that's paid out. Also, if you look at Gains Network, 20 million paid to VLP. Granted, Gains Network has about 200 million TVL, so it's not exactly apples to apples. It's still a massive amount of buybacks, a massive amount of Vela that's turned into eVela because of those buybacks. And then when you just look at how much VLP can earn, being backed by stables, being paid in stables, while earning the Vela position, like I don't see how the VLP vaults don't just like get packed with liquidity. But these all have their own fits within the market. Like look, if you look at these fees generated, there's no lack of fees for these protocols. So there's a spot for Vela in here. I don't think it's going to immediately teleport to GMX's levels and be the number one like on-chain perps DEX, but I do think it's extremely bullish. I really do like their model. Can they get to this level? Absolutely, especially if a bull market comes. I think that could be pretty realistic. It might take some time, but like if you're talking 80 million in buyback, I can't even imagine what Vela price would get to. I'm not even going to speculate for you. You guys can do your own research and do some of your own math there. But like the point is, like as some of those things skyrocket, the more rewards for VLP, the more rewards for Vela, and like the flywheel continues. So extremely bullish on the model. I really like the team. The UI is extremely clean. They're one of the few protocols that I feel like is absolutely prioritizing the trading experience with tooling, with like position management, with stop losses, take profits. Like not a lot of other exchanges are really concentrating on that. And I think that can really set them apart and lock in some of those top tier traders who care the most about the experience and are using this stuff day in and day out. So I really do like the platform, super bullish on it in the long term. With that said, they are doing an airdrop for any early users of the public beta. That should be going on for at least the next week or two, probably through February, if I had to guess. But there isn't a whole lot of information out there on it. So if you want to support the team, make sure that we're continuing to push out content as much as possible. Please go ahead and use the reference link. All of this will go back to paying the SCS Labs team, to growing the team and continuing to provide content for you guys. And also, like, if you go through, click this link, it'll be in the description below. If you use that, I think we'd like to do some giveaways here in the near future of people who use the link. So I'll keep that one, I'll say to myself for now, of like what some of the plans are there. Appreciate you guys tuning in. Please like, comment, subscribe. Let us know in the comments if you guys have any feedback for us and any of the projects that you'd like to see us do next. We do have positions in a lot of these underlying projects. I try and only highlight stuff that I'm extremely bullish on and I would buy with my own money. So it's something that I try and trade with narratives and build long-term positions and conviction around a lot of these plays. So I'm not just going to highlight anything. So it has to be good stuff. So only show your best if you're going to comment any projects that you'd like to see us highlight in the future. But thanks for tuning in and have a good one, guys.